Gold is surging. What does it know that you don't? Gold isn't supposed to behave like this, at least, not yet. While most investors are chasing tech stocks, distracted by the crypto hype or clinging to fading confidence in fiat currencies, one quiet giant is moving with purpose: gold. It's surging. Not with noise, but with the kind of steady, silent momentum that often signals something much bigger is coming. What's driving this rally? Inflation? Yes, but that's not the whole story. Fear of recession? Possibly. But when you look deeper, you'll find something more unsettling. Central banks are stockpiling gold at a pace not seen in decades. Countries are trading outside the dollar system. And the so-called safe haven status of gold is becoming less about safety and more about survival. So, what does gold know that the rest of the market is ignoring? Why are the world's largest financial players hedging with gold while retail investors sleep on it? In this video, we break down the signals, the silent strategies of the global elite, and why gold's surge may be the biggest red flag for what's coming next. If you value clarity in chaos and truth over noise, then make sure to like, subscribe, and share Money Minded, because understanding the real story behind the numbers has never been more important. Chapter 1: Central Banks Know Something, Their Gold Strategy Exposed. In the world of central banking, silence often speaks louder than words. Behind the polished speeches and vague policy statements, the real moves are made quietly, and lately, those moves are glittering in gold. Let's start with a fact that should raise eyebrows, according to the World Gold Council. Central banks bought more gold in 2022 and 2023 than at any time in the past 50 years. The trend didn't slow in 2024, and now in 2025, it's accelerating. But why? Most analysts shrug it off as simple diversification. But when you zoom out, a deeper, more strategic shift becomes clear. Central banks are preparing for a monetary realignment, one that could shake the global financial order. They're not just buying gold. They're hoarding it. It's not just the usual suspects like Russia and China. Poland, Turkey, India, Singapore, even non-traditional players, are stacking physical gold, not ETFs or paper contracts. This isn't portfolio hedging. This is a coordinated accumulation of real, unencumbered reserves. In fact, China has been quietly adding gold to its official reserves every single month for over a year. Why? Because gold is one of the only assets outside the reach of US financial sanctions. In an era where geopolitics increasingly weaponize currencies, gold offers sovereignty. Think about it, gold doesn't carry counterparty risk. It doesn't depend on the US dollar system. It can't be frozen by a foreign central bank or denied through a SWIFT message. When central banks start valuing that kind of independence more than yield or convenience, it's a clear sign of mistrust in the system they once built. A signal from the shadows. Most people don't realize this, but the price of gold isn't just about fear or inflation. It's also a barometer of confidence in global institutions, especially the US dollar. For decades, the dollar reigned as the undisputed reserve currency. But in recent years, cracks have appeared. The ballooning US debt, recurring debt ceiling crises, rising de-dollarization efforts by BRICS nations, and the politicization of monetary policy have all contributed to a quiet, global rethink. In response, gold becomes the ultimate neutral asset, a place to park value when trust is in decline. And the central banks know it. That's why their gold purchases are often done off-market, in bilateral deals that never touch the COMEX. It's not about speculation. It's about security. This isn't 2011, it's much bigger. You might be thinking, gold has surged before. Isn't this just another temporary spike? Not quite. In 2011, gold spiked amid the Eurozone crisis and US debt downgrade. But that rally was retail-driven, investors reacting to headlines. Today's surge is institutional. It's stealthy. It's backed by physical gold demand that far exceeds what's available for sale. That's why premiums on sovereign gold coins and bars have spiked globally. Supply is tight, not because of panic, but because of strategic withdrawal. And that's a very different beast. What are they preparing for? Let's ask the uncomfortable question: if central banks are quietly insulating themselves with gold, what storm are they anticipating? Is it a dollar crisis? A collapse in sovereign debt markets? A geopolitical fracture that fragments the global monetary order? No one knows for sure, and that's the point. Gold is their insurance policy, their exit strategy, their firewall against a system they no longer fully trust. And here's the most important part: they're making their move while you're distracted. While the headlines scream about AI stocks and meme coins, the architects of the financial system are quietly stepping away from the system itself. In the next chapter, we'll shift focus. While central banks hoard gold in silence, Wall Street is still selling the narrative that everything's fine. But is it? Stay tuned for Chapter 2, The Disconnect. Wall Street laughs. Gold doesn't. And if you're finding value in this, make sure to like, subscribe, and share Money Minded, because understanding what central banks do, not what they say, could be the key to surviving the next big financial shift. Chapter 2, The Disconnect. Wall Street laughs, gold doesn't. Turn on any financial news channel, and you'll hear it. Markets are up. Optimism is back. The Fed has it under control. Wall Street seems to be celebrating again. Stock indices are climbing, risk appetite is returning, and the fear trade is fading into the background. But beneath the surface, there's a strange silence coming from gold. Because while Wall Street laughs, gold isn't moving like a scared asset, it's moving like a smart one. And it's diverging from the narrative being sold to retail investors. The great confidence illusion. Let's be honest. Wall Street runs on sentiment, not truth. It's built to sell the idea that everything is under control, that the Fed can engineer a soft landing, that inflation is transitory enough, that the system is sound. But markets aren't reacting to fundamentals anymore, they're reacting to expectations. Rate cut rumors. Earnings beats that rely on buybacks. AI hype cycles. It's optimism engineered by design. Meanwhile, gold has no earnings report. It doesn't care about forward guidance. It's a silent observer of systemic trust, and it's not buying the narrative. Gold's rally tells a different story, that under all the celebration, real risks remain unresolved. Debt levels are unsustainable. Central banks are boxed in. And systemic fragility is growing. What the smart money sees. Smart investors follow flows, not feelings. And the flow into gold isn't retail-driven hype, it's strategic allocation from those who don't need CNBC to know when something's wrong. While retail investors chase performance, family offices and sovereign wealth funds are quietly increasing their gold exposure. They're not looking for quick gains. They're looking for exit ramps. You won't see this move reflected in Robinhood charts, but it's there in the rising premiums on physical gold, in the dislocations between COMEX and London markets, in the increasing difficulty in sourcing large gold bars from vaults in Zurich and Singapore. This isn't fear. It's foresight. diverging for a reason. So why the disconnect? Because gold doesn't trade on emotion, it trades on consequence. Wall Street can pretend the debt ceiling isn't a problem. Gold can't. Wall Street can cheer soft landings. Gold remembers that soft landings often precede hard crashes. Wall Street can ignore rising geopolitical tensions. Gold doesn't forget Afghanistan, Ukraine, Taiwan, or the Red Sea. Every time central banks signal a pivot, Wall Street cheers. But gold listens for what's missing, and what's missing now is trust. That's why gold moves higher even as rates remain elevated. It sees through the noise. It bets not on today's headlines, but on tomorrow's cracks. History rhymes, again. This isn't the first time markets and gold diverged. In the early 2000s, Wall Street was euphoric about the dot-com recovery. Gold began a quiet bull run that lasted a decade. In 2007, stocks hit new highs, even as gold began flashing recession signals. 1 year later, Lehman collapsed. Gold always moves early. Quietly. Without fanfare. And when it does, it usually means the system is flashing yellow, even if the dashboard still says green. That's where we are now. In the next chapter, we dig even deeper, beyond the banks and Wall Street, into the tectonic shifts in global trust. And why the world may be preparing to reprice everything based on hard assets. Coming up, Chapter 3, Gold versus the System. A war for trust. And if this content is opening your eyes to the bigger game being played, don't forget to like, subscribe, and share Money Minded, where we don't just follow the markets. We decode the motives behind them. Chapter 3, Gold versus the System, a war for trust. Trust is the foundation of any financial system. Not gold. Not dollars. Not interest rates. Trust. And right now, that trust is quietly collapsing, not in headlines, but in behaviors. In decisions. In what institutions are doing, not saying. The rise of gold is not just a price story. It's a trust story. And the battlefield is the global monetary system itself. The system was built on promises. After World War II, the global financial system was rebuilt around the US dollar, backed by gold at the time. But in 1971, when the gold standard was officially abandoned, the world entered a new era, trust-based finance. You were no longer exchanging paper for metal. You were exchanging faith in central banks, in governments, in fiscal responsibility. But what happens when that trust begins to erode? We now live in a world where sovereign debt is ballooning beyond historical precedent. Currency debasement is policy, not accident. Central banks are forced to contradict themselves, hiking rates to fight inflation while monetising deficits through the back door. The institutions that were once anchors of stability are now trapped between conflicting goals. And investors, both big and small, are noticing. That's why gold is rising. Because it doesn't require belief, it simply exists. Gold, the anti-system asset. Unlike fiat currencies, gold has no central issuer. Unlike bonds, it doesn't depend on repayment. Unlike stocks, it doesn't rely on future cash flows. Gold simply is. And that makes it powerful in a world of synthetic value and overstretched promises. It's not just an inflation hedge. It's not just a crisis asset. It's a protest. When central banks buy gold, they are quietly hedging against their own failure. When countries reduce their reliance on the dollar and settle trades in gold or alternative currencies, They are signaling a shift in allegiance away from the institutions that once ruled the global economy. This is not just a cyclical trend. This is a strategic realignment, one where gold is being reintroduced into the architecture of global finance, not through formal policy, but through deliberate action. A new monetary world is forming. We are witnessing the early stages of a new monetary order. It won't be announced. It won't be coordinated. It will simply emerge, slowly, then suddenly. You'll see it in trade deals between nations that exclude the dollar, payment systems designed to bypass the Western banking infrastructure, digital currencies backed by gold or baskets of commodities, growing distrust in paper money and growing premiums for physical assets. The current system isn't being replaced overnight, but it's being challenged, quietly, from the edges. And gold is the silent cornerstone of this alternative. Because gold does not lie. It does not default. It does not inflate itself. In a system increasingly full of noise, gold remains a signal. This is why you're not supposed to notice. The reason gold is rarely talked about seriously in mainstream finance isn't because it's outdated, it's because it threatens the narrative. A world where gold rises is a world where trust in the system is falling. And that's not a message the system wants to sell. But make no mistake, the smart money sees it. The silent institutions feel it. And the market is slowly reacting to it. The question is, will you? In the next and final part of this video, we bring it all together. Why gold is surging, what it really signals, and what you can do about it now, before the rest of the market wakes up. Coming up next, conclusion, gold's silent warning. What smart investors are doing right now. If you've made it this far, you're already ahead of 99% of investors. So be sure to like, share, and subscribe to Money Minded, where we don't follow hype. We follow truth. Conclusion, gold silent warning, what smart investors are doing right now. If you followed this far, you already understand something that most of the market doesn't. Gold is not just reacting, it's revealing. It's revealing a quiet panic inside the institutions that built the current financial system. It's revealing distrust, fragmentation, and a growing demand for real value in a world flooded with artificial confidence. And most of all, it's sending a silent but urgent warning to anyone willing to listen. The rules of the game are changing, fast. The question now is, what can you do about it? Step 1. Understand the real risk. The biggest threat in today's financial environment isn't just inflation or recession, it's misplaced confidence. Markets are being propped up by faith in central banks, hope in fiscal bailouts, and blind belief that we can print and borrow without limits. But history is full of systems that collapsed the moment belief gave way to reality. Gold is rising because that belief is beginning to crack. And when cracks turn into breaks, the repricing is brutal. So don't just watch markets, watch behavior. Watch what central banks do. Not what they say. Watch what billionaires buy, not what they recommend. And what they're doing right now is turning quietly toward hard assets. Gold, in particular. Step 2, get ahead. Not caught behind. This isn't a call to panic. It's a call to prepare. If you think of gold only as a speculative trade, you're missing the point. Gold is insurance against systemic failure, against financial repression, against the slow erosion of purchasing power through engineered inflation. And the best time to insure yourself is before the fire starts. That doesn't mean you go all in. It means you allocate intelligently. It means you look at your portfolio and ask, what part of this would survive a sovereign debt crisis? A currency reset? A liquidity freeze? Smart investors aren't betting on gold skyrocketing tomorrow, they're betting on having something of value when trust collapses. Step 3. Stay curious. Stay skeptical. The narrative machine is powerful. It will keep telling you that gold is irrelevant, that crypto is better, that the Fed has everything under control. But narratives serve agendas. Data reveals direction. And gold's direction is clear, up. The biggest advantage you can have in this coming financial shift is not wealth, it's clarity. The ability to see through the noise. To ask why the institutions you're supposed to trust don't even trust themselves anymore. Gold is not your answer to everything. But it's your answer to one specific question. What do I own that no one can inflate, devalue, or seize? If you don't have an answer to that, you don't have a strategy, you have hope. Final thoughts. The silent surge in gold is not a glitch. It's a signal. And smart investors, the ones who thrive in crisis, always listen to signals. Don't wait for headlines to confirm what the charts and central bank vaults are already telling you. Now is the time to think independently. To act early. To move with conviction, not because the market says so, but because the system is already moving beneath the surface. And that's exactly why Money Minded exists, to help you see what others miss, to decode what others dismiss, and to make sure that when the system shifts, you're not left behind. If you found value in this video, do what smart investors do, like this content, subscribe to Money Minded, and share it with those who still think gold is just a rock. Because in the next financial chapter, truth is your best asset, and gold is your loudest whisper.